What's going on, guys? So in this video, I'm going to be sharing my screen and tell you all about the option picks that I'm looking at. A lot of important stuff coming because the market is recovering, so there's a lot of opportunity to make money right now. So jumping into my screen, you will see right here that I am actually back at 1.6 mil. So I made basically all my money back during this time. I did go significantly less risky. I did hedge my portfolio. I was using covered calls. I was selling puts during all that volatility. And honestly, right now you can see my portfolio has completely recovered. I have stuck to my guns on many stocks like Tesla, although I did put a lot of my money into index funds and I shifted some risk. And again, if you want to see all my plays, that's in the Discord group. You can see right here, there's a whole lot of students making a lot of money. One student made 275% return. Another student made almost $1,000. So I do want you to check out that first link in the description. I was informed by my team that in April, we will be raising prices. My team told me that we have to accommodate for the 20 different personnel that we have, giving students success. We now have 3 option coaches, a CPA, multiple support staff, everything that you need to learn how to trade options and make thousands of dollars per month really fast. Now, also, I do want to share my screen here because I have 2 different portfolios that I'm running right now, which students are following. Basically, in that group, I am doing buy and sell signals. This is my scaling with spreads challenge. You only need few $1,000s to start this. I started with $7,000. You can see here in the past 5 or 6 months, when I started this portfolio, we have collected a total of $8,326. I didn't win on all of the trades. I definitely had some losses, but my total return is $3,368, which is a 48% return in the past 6 months. So we're on track to double our portfolios in the next 6 months. Now, also, I have a main portfolio. I'm always adding money here. I'm also always taking money out of that portfolio, but a total return of the past 12 months has been $861,000, a 55% return. So in this portfolio, I actually outperformed the scaling with spreads challenge. However, the only reason I really did that was probably because I had a big position in Tesla stock. So I did have a one-time huge gain, but still the results are the results. I had a lot of Tesla. I did a lot of put credit spreads. I ran a lot of different strategies and I had a really big return here that actually outperformed my smaller portfolio. But going forward, I do expect my smaller portfolio to outperform my main portfolio because I don't have as much Tesla in my main portfolio. So even if Tesla were to go up, I wouldn't have as much of a gain as I had before. So make sure you do check out that first link. It's a free training. And then you can book a free call with someone on my team so you can learn about the Option Income Academy, how you can work with me personally, how you can get access to the group and my signals, and how you can be a part of a community that's making a lot of money. Now, what we're going to do is we're going to look at my screen right here. I'm going to go through a list of different stocks and I want to do some analysis on these stocks because I want to show you which stocks I believe are a good buy right now, especially as they are recovering. I'm going to do a few different stocks. First one I'm going to start with is Hims. Hims is a stock that I have a lot of conviction in. This stock has been really volatile for the most part. However, it has a very strong support. You can see a multi bottom right here at $4.19. Then we had a huge sell-off and again $4.20. That's 2 times where it's around $4.20. And then we did test the bottom. We went below $4 per share, $3.90. However, I was really bullish on this stock. I think they're in a lot of different spaces that are really good. Spaces that, a lot of men need. They're in erectile dysfunction, they're in mental health, they're in skincare, they're in online therapy. They do a whole host of different things. And their business model is basically collecting consistent cash flow from their customers because a lot of these pills that they're pushing or online therapy or what have you are subscription services. So they keep getting those cash flows. The CEO went to University of Pennsylvania. I went to Drexel University. So UPenn is right next door. It's an Ivy League college. So I have a lot of conviction in the CEO. Also, this company is in the telehealth space. So I like telehealth as a sector in general because people don't want to go to the doctor anymore. They want to do everything online. It's much easier. It's much faster. And Hims and Hers has a lot of different services and subscriptions that have a very good price. So taking a look at Hims, it's currently at $5. If I go to trade options, there's a number of things that you can do here. Obviously, you can buy call options because right now the recovery, I can just see a lot of people making money off of buying call options since the momentum has just shifted. I mean, we were in a downward slope for a very long time. Most of the stocks sold off, including Baba. I put $500,000 in Baba. I made that video. I got some comments saying how I was wrong. I was wrong for like a week, okay? Alibaba is like $114 stock right now. Yes, there's a lot of volatility. A lot of stocks that I'm mentioning to you guys have volatility because that's where the opportunities are, especially if you're trading options. Volatility should be your friend. I mean, that's the reason why I made $800,000 in my personal portfolio, and then my scaling with spreads portfolio is also up 50% in 6 months. That's because I'm taking on risk. you can't basically make any money if you don't take any risk. So a lot of these stocks are a bit volatile, but hey, again, if you manage your risk properly, which I do talk about in my Discord community, I have master videos on managing your risk, asset allocation, exactly how much you should put into each and every single strategy. I have it all nailed down to a science. So if you do those things, you're going to get not only high returns, but you're also going to manage your risk and not lose any money. Because I know so many people out there, they're running some of the same strategies that I'm doing on YouTube, but they're not having as much success, and that's because their position sizing is usually basically off. It's either too big or it's too small, or they're not having a proper exit point. But anyways, for HIMS, what I'm looking at is potentially buying some call options. The stock just went above $5, so it's at $5.29. What I would do is, I would potentially look at buying the August 19 call option. Again, obviously not a financial advisor, I don't know what's going to happen, but I want to be long on these stocks that are rebounding. So a $5 call option right here is going for $1.20. The break even is $6.20. The good thing is about this call option, you are capturing in 1/4 of earnings at least. So, if HIMS has a blowout quarter, we could go to potentially $7 per share. You can get a pretty decent return, maybe 50% or higher in the next 3 to 6 months. Again, if you do want to be safer though, you can go for something like a leap option. You can go out for January 20, 2023. If this stock has a significant recovery, then you would actually double or even triple your money. Because if I go to the 1-year chart, this stock was trading for about $15 per share and currently is trading for $5. So, in theory, it's on a 67% discount from its very peak, but hey, you don't even need it to go up to $15 to make a good profit. So anyways, that's the first stock, HIMS. Now I want to look at the rest of my portfolio right here. So, we have other stocks in the metaverse that were related to the metaverse, like Disney, we have Nvidia and other good stocks out here. So some of these stocks are really expensive. So maybe I wouldn't recommend Google. However, when I think about it, I would recommend Google because they are going to have a stock split in the near future now. So, they're going to have a 20-to-1 stock split. The stock is going to go from $2,800 down to about $140, give or take. So this will be a good candidate for buying call options on, for selling put options. If you have, $14,000 in your portfolio, that would be a good position to take on Google. I'm not going to click into it because we do have some time left for the split to happen. And I do know that a lot of people are working with small portfolios. So I'm going to focus on, some of the smaller portfolios out there right now. Now, Facebook can be fantastic. I love Facebook because it's a blue chip stock. I know they're investing in the metaverse. I know that they had some problems with basically their cash flow last year. They didn't really report good numbers. And I know they're struggling in that regard. And a lot of people are worried about Facebook right now, especially with TikTok becoming a bigger threat to basically all the social media out there, because short form content is performing a lot better than long form content. People are spending more time on the TikTok app than, Instagram Reels, than Snapchat. And that's basically why you're seeing all these services go out there like YouTube Shorts, because the market understands that, there's a lot of opportunity here. And if they don't get on this, then they're going to have a problem if TikTok continues to grow. So we're going to take a look at Meta Platforms right now. It's sitting at $216 per share. If I go to the 3-month chart, it's down 34%. And actually, you guys will see right here that I made $595. This was a short-term trade that I made. I sold some puts, told the Discord community about it. So we're up $595. This is a bigger position, but hey, I'm showing everyone in my Discord community that, basically when I open up a put option, when I'm selling a put option, I show them how to set up a put credit spread, because a put credit spread only needs, $500 or $1,000. So when I open up a position, when I sell a put, they already understand how to do a put credit spread. So basically everyone's following my trades and they're making good money. So maybe they haven't made $595, but you can certainly make a few $100s on put credit spreads if you're opening up a decent amount of them, which is basically $1,000 to $2,000. You can make about 20 or 30% on that position. So, maybe you can make $500 or $600 on a put credit spread. Now, Facebook is a perfect candidate. I did open this up before. You guys can see right here that I did basically find the bottom of the stock. That's why I alerted my group right away when I think that Facebook could not move any lower, and I was completely right here. But again, I do want to share it with the YouTube family as well. The stock is up now a bit, but I would still look into selling put credit spreads at $195, $190 put credit spread. That could do really well. And again, I did find the bottom right here, so I alerted the group right around these levels, and I ended up being completely right. I couldn't find any more reasons for Metastock to move any lower. The stock had a major sell-off from $323 down to $237, and then this slow, painful move lower just continued for a while. I was very patient, but once I saw it under $200, once I saw it move at $195, told the group right here, hey, we have to sell some put options. options. It's a must. And I actually did this on margin personally because I don't have any more capital in my main portfolio. But I said this is a move that we have to make. Just absolute must. And so far up 48% on this put option. But of course, other people in my group have put credit spreads. But anyways, a put credit spread, you would simply go to trade Facebook options. You would click sell. You would click put. I do have full videos on put credit spreads. So I'm going to link that down in the description as well, right below the private Discord community. But basically, if you go out here, maybe April 14th, you can sell a put credit spread at a strike of around 190. I'm going to show you what I'm looking for right now. So if I scroll down 195 right here, you can see my chance of profit is 84%. Now, if I expand this option, bid ask is pretty good. Volume is amazing. Implied volatility is not as high as I would like it. Now, the reason why it's probably lower is because we're having a rebound in the stock market as a whole. But hey, this is not a bad implied volatility. Anything over 40 is decent. So if I sell the 185 and then I buy the leg lower at 192.5 strike right here, if I buy this option, and then my total credit is 32 bucks. This may not seem like a lot of money. However, if you realize that, you're really risking 200 bucks to make about 30 bucks, that is a really big return. In fact, this is going to be about a 15% return in about 3 weeks. So obviously, if you're working with $1,000 portfolio, you can make 150 bucks in 3 weeks. But of course, I like to work with people that have at least $3,000 to $5,000 in their portfolio, because that way, they can afford the mentorship and also have some capital left over where they can have a good profit on their hands. So say they have, $3,000 left over, then $3,000, if you make 15%, that's going to be $450 that you can basically make in a month. So if you're doing that every single month, then you can make about $5,000 a year. Of course, results do vary, but I've seen that case happen over and over again where you can make a few $100 with a few $1,000, So Facebook put credit spread does look good to me. It is a $32 total credit. Not bad at all, especially for a couple $100 worth of investment. I mean, literally, anyone can go out there and make that position happen for themselves. Now, I do want to go over a third opportunity. So I do want to look through the rest of my list right here, because I think there's a lot of opportunity out there. Frankly speaking, I think maybe half of my list here, half my watch list, has opportunity for you to trade and enter some type of position. In my program, I go over 16 different option positions. I mean, there's 16 different ones. So it'd be impossible for me to cover all of them in one video, but you can find opportunity on something if you have 16 different strategies in your toolkit. Taking a look right here, I have CMG in my portfolio. I love Chipotle. I love eating at Chipotle. The food is amazing. I'm up $129. I'm basically playing this position right here. I'm going to go into it. I think it's a really good position for other people to play. And frankly, I think this position should be up more. It actually doesn't even make sense to me, but I do realize that this option position expires in June. So basically, I bought a $1,500 call option. I sold a $1,520 call option. So I'm basically playing a bull call spread. I do have videos on that. I'm going to link below as well. But I'm doing a bull call spread. This is a small account strategy that I have in my playlist. You can watch for free if you want. A $1,500 call option and a $1,520 that I sold. So basically, it's a bull call spread. I'm hoping that by June 17, this option position or the stock stays above 1520. But the stock is currently at 1558. So I was completely right about my prediction of what's going to happen to Chipotle. However, I'm only up 12%. So this doesn't make a lot of sense for me. I would think that I'm up a lot more because this option is so in the money. But I do realize that, in option trading, you are playing with bid-ask spreads. So maybe Chipotle is not as liquid. That could be one reason. And the second reason is there is a lot of time left on this option. There's about 3 months left for the option to expire. It's currently March. It's end of March right now. And this option is going to expire in June. So for me, only being up 12%, but being completely right on the stock, I think there's a lot of opportunity here in Chipotle bull call spreads. All right. Again, I do want to emphasize that prices are unfortunately going to go up in April. My team notified me. It wasn't my decision. I want to keep prices the way they are, but my team is growing. We have so many successful students, and they said that we're undervaluing ourselves because we're getting such big results. So I do want you to check out that private Discord community in the link in the description. As you can see on my screen, we collect an average of about 10% per trade. I've collected over $8,000 total, but my total return is over $3,300, and I only started with $7,000. This portfolio was started at the end of August, so basically in September. It's been about 6 months, and we're up about 50% on the portfolio. So I want you to have similar results. This is something that I know I can get you results in. It's way better than doing it yourself. Check out that Discord community by hitting that first link in the description. And I look forward to mentoring and coaching you in the near future. Have a fantastic rest of your day.